Once again, I'd like to welcome each and everyone into today's session. And today, the topic we'll be treating is market geometry with market structure. What do I mean by the statement market geometry? If we talk about market geometry, it simply means the shapes and the patterns that you are going to be witnessing or be seeing on the charts day in and day out. It's like talking about houses. It's like talking about homes. Every home, every individual style of home has got a shape. It's got a pattern. It's got a foundation to it. It's got probably some pillars to it. It's got some flooring to it. It's got some stairways to it. And it's got roofing to it. Every single home probably does. If you go to other homes, it's got different colors of painting to it. Some people are painting the inside of the home white, people painting blues, people painting greens and other colors. And these are all parts of the structures that builds to make you realize that this home is so nice. I want to live in this home because I like this shape of the house. The same way the market has got a specific shape. And that particular shape repeats itself every single day, at least on one particular time frame. And you will be surprised that if you're able to identify this pattern, then you are highly probable to almost identify setups to trade every single day, or at least 3 times in a week. If you can identify 3 setups in a week to trade, you should definitely hit your target by the end of the week. And that is all the basics of what I'm going to be talking about as market geometry. It's just the shapes and patterns that occurs in the market. So before we can see a shape and patterns that occurs in the market, let's draw our attention to this. We've always talked about, we've always been on Zoom sessions, Go Light sessions where they're talking about the patterns where from an uptrend you can see price dropping down and price making a movement back up. Once again, you see it drop down again. Then it does a movement back up, then it drops down again. Most of the time, we like to talk about this three-way pattern that happens in the movement in Forex market. And the reason why we touch on this pattern is usually this pattern is classed as an Elliott wave. Just that Elliott waves has got specific Fibonacci ratios to it. I don't want to be touching on Fibonacci ratios yet. All I want you to understand is the shapes that you're definitely going to be seeing in the market, whether it's a downtrend, an uptrend, or a ranging market. Once the price finds a support area, then it's going to create something called a ranging market. It won't look so perfect as mine is probably looking, and we're going to identify some of them on the charts eventually, so you can tell for yourself. You're going to see some of the shapes, something like this in the market every single time. Every time frame that you're going to walk to, you're probably going to be seeing these things, guys. How do you classify these things that you're seeing, these drops and upward? If I go on the charts every single day, the first point that I see, the highest point that I see, I want to label that point as a high. Every single time I open my chart, the highest point that I see on whatever time frame, I want to label that point as a high. On the high, the first support area that I identify, I am going to be label that area as a low. Some of you probably on this call knows all these things already, but like I said, I want to touch base and describe exactly how harmonics came by. So now we have a high and then we have a low. After you have identified a high and a low, there is always, and I repeat, there is always one or two things that would happen from a high and a low. You are either going to have a retracement or a correction. How many of you on this call knows the difference between a retracement and a correction? If you know it, can you give me a 2 in the chat box, please? The difference between a retracement and a correction. All right, so I've got some few people that knows and other people do not know. All right, no worries. I am going to talk about it anyways. The difference between a correction and a retracement is that a correction happens when there has been an impulse move. That is one description of a correction. A correction happens when there is an impulse move. And a correction is always less than 50% Fibonacci level. So if we're taking some notes, please, let's write it down. A correction happens after an impulsive move in the market. What is an impulsive move? A move that happens usually around London session and New York session. You see the prices madly moving up and down crazily with no form or no shape. You can't really understand how price is moving in that form, but yes, it is. Every time that we see those moves happen, there is correction in place that occurs. That is one characteristic of a correction. And the second characteristic is that a correction is always less than 50% Fibonacci level. What do I mean by less than 50% Fibonacci level? After you have identified the high and the low, now you're going to pull your fib, right? And run from the high to the low. In this case, this is the leg that we're talking about. I'm going to change the color into blue. This is the leg that we're talking about. If this leg right here do not go above the 50%, what do I mean by above? 50%, 68%, 71%, 78%, 88 to 100%. If we don't get that form of retracement, then it is a correction. However, in this case, immediately you go past the 50% into the range of 50%, between 50% and 100%, then you have what we call a retracement. Have I explained that very well? Can I have a 3 in the chat box if that's correctly explained, like properly explained, please? And guys, it is very key. It is very, very key to always be able to identify a full retracement before you jump into a trade. Corrections are so nice if you can trade them based on specific and different forms of confirmation that you can get. However, they are always the most, I'd say that the riskiest trades that you can take. If you don't know how to trade them, if you can't really identify that is really a correction and not a retracement, it is going to be a challenge for you. You can see in the chat box, people are asking. So retracement 50% above and correction in 50% and below. Well, I'd say everything that touches the 50% is a retracement, but if it is below the 50%, is a correction. All right. Yeah. It is very important to always trade off a retracement rather than a correction. As a beginner trader, I am gonna recommend that. If you do not get a retracement, don't jump in the trade, no matter how good the trade is gonna be. And I'm saying that because that will actually help. It will protect your account so much. And as we go on to the actual chart, I will show you why this happens all the time. People seeing corrections as retracement and trying to trade it and end up getting bent. So now, for me personally, if I do not get a retracement, a true retracement, which is 50% and above, I cannot label this area. And I repeat, I cannot label that area as a lower high. Okay, let's look in the chat box. Some questions coming in. Can you repeat the retracement definition? Okay, what I said a retracement is any pullback above 50% and between 100%. Any pullback in the market above 50% and between 100%. If you go past 100%, it's no more retracement, it's a break of structure, which I will explain now further. So where I left off, I was saying, if I do not get a true retracement, I cannot label this area as a lower high. It's not. I will always have to wait and make sure that I have a lower high before I can jump into a trade. I hope we're taking some notes, guys. All right, so now that you've been able to identify a lower high, the next thing that you need to know for a market to actually give you is a break of structure. And a break of structure do not happen until you have gone below. Now I'm going to use an arrow, this point. And I'm going to change this color into, let's put purple. Until you have a break of structure, you don't have a trend. I know some of you might be asking, so you'll be asking yourself some questions. What is he trying to talk about? But yeah, I'll go a little bit deeper as time goes on in this session. You need to break the structure. And what structure am I talking about? The low that you have identified. You break below it, and that break, it don't matter what level it goes. Usually, in market structure trading, if we break below this low, you would always find this trade. If you pull your fib from the low to the lower high, you will always see this leg between here 1.272 and 1.618. So I'm going to mark the range for you. If you pull your fib from the low to the high, the lower high that you have identified, you'd always realize that the price is most of the time, I'd say 80% of the time, going to finish in the range of 1.272 and 1.618. And that is where you're probably going to see the next reversal. If that did not happen, trust me, the next thing that you're going to see is price just flying through and going. And that is the sort of impulse move that we do talk about. We might see some on the chart once we go onto the chart. Now that you have identified the next breaker structure, you can clearly identify this area as a lower low. And once again, always pull your fib from the next lower high to the lower low. And make sure that it's 50% before you can label it as a lower high. In the case where we do not have 50%, wait for an actual 50% before you label it. Trust me. And with this said, I am going to show you one more thing. And that is trend lines. Most of us on this call know trend lines already. I cannot join a trend line from this lower high to this lower high. I cannot do that. I know so many people drawing trend lines and saying, oh, the trend line broke so easily and the trend line wasn't true. Francis, we trade smart money and we don't understand why you're talking about trend lines. If I draw a trend line from this high to this lower high, and I stretch, I clone that to this low, I expect most of my lower lows to land on that clone. Are we learning something here, guys? Did we get that? If it is a proper structure, if you draw your trend line from the very high to the low high, the first low high, and you clone that structure to the low, you should see the rest of or most of your lower lows landing on that clone. If that did not happen, I'm sorry. The trend line that you drew is probably wrong. It's just wrong. You can't use that. I know so many people talk about trend lines as joining 2 points, and then yes, you have a trend line. Can I just join any 2 points in a building and create a proper structure of the building? No, it don't happen like that. Your building is probably going to collapse. Think about it that way. The same way they move prices in stairways form, they have to move it in a very accurate manner. They know exactly why they're doing that. And most of the time, yeah, if you see the reversal happening on the clone line, you will always see either 2 or 3 shapes of candles, an engulfing candle or a pin bar. And I'll point it out to you once we go there. Has everything that I've explained so far making sense? Give me a 4 in the chat box, guys, if everything is making sense so far. Brilliant. Nice. Now, look at something very, very significant happening right here. When the price got to a point of consolidation, yeah? Look at here. We touched here. I'm just going to put a line here. Let's put a purple line like I did over there. Purple line here. And a purple line here. Another purple line there. All the purple lines are just breaks of structures, So understand why I've labeled them in such a way. Look what happened. The touch over here and the touch over here. What is common between them? This area and this area. What is common between them? Anybody in the chat box, please? I love it when these things happen. Okay, somebody is talking about BOS. I label this area, the lower high that I have over here, and this point inside the consolidation, the second point inside the consolidation. What is similar between both of them? They're both on the BOS, right? And the last thing I want you to point out is look at this line right here, the line that we did clone from here. The line we clone from the high to the lower high is touching that line. Price is touching that line. Can you all see that, guys? I don't know. People are not getting it. Can you see it? Okay, let me go over it again. You mean that both have in common that they touch the trend line? Yes, they do touch the trend line. That's what I'm trying to talk about. The trend line that you cloned from this high to the lower high and you pull down here on the low, if you stretch it, if you extrapolate it, you'd realize that price is touching it again inside the consolidation where price is about to reverse. You see this. Is it clear now, guys? Fab. Now look at what's happening over here. As price is about to reverse, look at what shape we have here. How many of us knows what this shape is? What shape is that? Head and shoulders, guys. Head and shoulders. And this is how the market is built. When we were doing smart money, I did tell you that whenever we're going to see price reverse, we must sweep the liquidity of the same leg that has created. And this is how that happens. You're always most often going to see that shape right there, head and shoulders on the tilt. Now, too much talking on this shape. If you haven't taken a picture of this page, please do so. I'm going to clean the chart and then we'll go straight on the proper chart. If you want to take a picture, you can do so. If not, I'm just going to take a screenshot and put in the chat box. You can take it. This is very important, guys. I'm going to clean it now. Let's look at what happened here. I'm just going to take a portion of the chart to show you what's going on here. Look at here. Look inside the yellow box, guys. Because this is an uptrend, I am going to mark out the lowest point first. So the lowest point that I see in my yellow box is going to be here, and that will be my low, the opposite of what we did. And now I know my low is there, my high is going to be here. And one important thing, now I'm going to take this yellow box off. No, actually, let me maintain it. I'll change the color of this. One important thing that I want you to know, I don't know if I was teaching this to this team or not. I told you that supports are not just lines, they are zones. Who remembers that? Does anybody on this call remember that? Supports are not lines, they're zones. All right, yeah, I've got some few people that. But yeah, what I was trying to say is that if you look at the high right here, where the high is created, look at how many times we had wicks spreading around that area. Or somebody's annotating my chart. Who is that? D Gray, can you please clear my chart for me? Somebody just annotated my chart. If it's you, can you please dig Gray, can you please undo that for me? Okay, so let me just clean it, please. Does anybody know how I can remove the annotation? Please. Settings, okay. All right, disable annotation. I have done that, but that one is still there. Oh no. Clear annotation, where is it? All right, thank you, April. I got it done. Yes. All right, so let's focus again around this area, guys, please. We lost a bit of time. It's not lost. We'll find it. We'll get it back. All right. I represented it with the yellow box at first, so I'm going to do a yellow box again. But look, and then we label this area as a low. We'll label this area as a high. And I said something about that area. Look at where the high is, guys. How many times can you see the wick floating around a particular zone? So that zone, you're going to mark it out like that to the closest body, and you're going to stretch it out. Now we're going to change this color into red. There is something very significant you're going to observe. Now look at the area where price actually came back to. Dropped again, and we finally broke it, came back to that zone again. Look at what the wick did and jumped up. Now, if I pull my fib from here, if I put a fib from the high to the low, look where it finished. Where is it finishing, guys? I'm not guessing this. It's just the structure of the market. 1.618. And it's the zone that we're talking about. Now, if I should mark this area is now going to be my higher high. And how would I know if this is truly a higher high? I have to fib from the low to the high. Do we have a full retracement or a correction, guys? Definitely interesting, guys. Definitely interesting. So now, do we have a full retracement or a correction? Now I see in the chat box, people are saying the retracement. Of course, so now we can label this area as a higher low. Once again, look at it. I'm gonna pull my fib from here to there. And what zone are we settling in, guys? The same areas that I spoke about, 1.242 and 1.414. Same zones that I gave you. And this is the structure of the market. So if we break out from the zone that you're looking at, this is the areas that you know you're going to be taking your TPs. I know I was on one of the Zoom calls I think Jessica Walker did with this team, and Jessica Walker was marking up smart money chart. She was using this kill. I don't know how she got it, but yeah, I don't know if she really remembers that. We fall within that zone exactly. But look where the break actually happened, here, this week. We have less than a minute to go, guys. I am going to ask everybody to go off this call. We come back and then we'll finish up the second part and we go. You can leave this call right now and come back in a minute time. ASAP.